What's up, everybody? This is Sunko, the Korean Bro. Today is 2024, February 15. And last night we had a bearish trend. And what really let me down was the fact that we had the biggest in a couple of months. Hmm, I had the Shopify, the stock is down by 15%. It's not exactly 15%, but like uh, at the end of the day, it went down by 11%, which really disappointed me because uh, I knew from the bottom of my heart that it's gonna go upward, like forever. Like knowing that it could, go down like this, it broke my heart. Mm. But you know, stocks go up and down. I know at the end of the day it's gonna go up, but still it hurts me really bad. Anyway, this is really late at night. It's already past 12, so I'm just gonna go read a couple of articles that got my interest, and I'll put an end to it after that. Okay. A low risk way to bet on ARM Holdings and AI as the stock skyrockets. It's Chipotle's Steinhander Fist. Chipotle's latest results is impressed the market. Management plans to gradually open new restaurants. Investors need to think critically about the current valuation. Rapid expansion. A key part of Chipotle's strategy is to open new restaurants at a rapid pace. The past couple of years, the openings have accelerated, are set to continue this year. After opening 271 new locations in 2023, the plan is to open between 285 and 315 this year. There's still a sizable growth runway over the long term. Listening to the executives, it's hard not to get excited about the company's prospects. CEO Brian Nicole is confident that there can be 7,000 Chipotle locations open in North America one day. This number might be on the conservative side. This target of 7,000 is higher than the 6,000 the business originally has set as the goal. Hmm. UiPath is leveraging robotic process automation tools and artificial intelligence technologies to help companies automate and streamline repetitive and rule-based tasks, which in turn help boost the latter's cost efficiency and productivity. The company is already seeing solid demand for its automation tools in traditional industries such as telecommunications, retail, manufacturing, and consumer packaged goods to drive efficiencies in areas like store openings, employee onboarding, and pricing strategies. Okay, I'm just gonna go read article about Shopify. I know I could read another article, but then it's too late to concentrate on the articles um, that got my less interest. So, uh, okay, there you go. Shopify return versus S&P. Mm. Okay. Shopify shares closed down 13.4% Tuesday after the Canadian e-commerce company reported better than expected earnings for the fourth quarter, but gave mixed guidance for the current period. Here's how the company did for the quarter compared with consensus expectations from LSEG, formerly known as Refinitiv. Mm. Jeff Hoffman, Shopify CFO, attributed the strong results to more product being sold on its platform. Gross merchandise volume, or the total volume of merchandise sold in the platform, increased at 23% to $75.1 billion, above the $72.1 billion expected by analysts, according to Street Account. Shopify's light first quarter guidance overshadowed the earnings and revenue beat. The company said it expects free cash flow margin to be in the high single digits, below Wall Street's projected 13.6%. The research note published Tuesday, a Wedbush analyst highlighted that Shopify's guidance implies operating income well below our estimates and consensus. The company's forecast implies adjusted operating income of $178 million, while consensus estimates are for $382 million. The analyst said Wedbush has a neutral rating on Shopify shares. Shopify called for first quarter revenue to grow at a low 20s percentage rate, which is that would translate into a year-over-year growth rate in the mid to high 20s when adjusting for the sale of its logistics business. It made the company offloaded its last mile delivery and fulfillment units at Flexport. Powerful testament to the progress we have made building fast, reliable, and unified software for merchants of all sizes. Internal tool for a snowboarding company, Shopify provides software platform for building and operating e-commerce business. If we apply the same principles, the enterprise software stocks leveraging their own generated AI capabilities may well be the gorillas of the future. So, in that spirit, we're excited to present our special free report. And you can't use accounting profits to pay the bills. Up 80% year on year. Shopify has generated $9 million in free cash flow over the last 12 months, a decent 12.1% of revenue. This FCF margin stems from its asset-light business model and gives us decent amount of cash to reinvest in its business. Key takeaways from Shopify's quarter four results. It was good to see Shopify's beat analyst revenue free cash flow estimate this quarter that was driven by better than expected gross merchandise volume and gross payments volume, which led to outperformance in its merchants and subscription solution segments. Some product highlights for 2023 include the launch of Magic and Sidekick. Both feature uses AI to make it easier for merchants to run their businesses and increase productivity. For example, one video showed the AI identifying which of the merchants' inventories were growing stale and automatically ran discounted promotions. Looking ahead at quarter first 2024, Shopify's revenue outlook topped Wall Street's forecast as it expects to grow in the low 20% range. Zooming out, we think this was a good quarter, showing that the company is staying on track. With the stock trading nearly 15 times sales going into earnings, however, the market was likely expecting more. The stock is down 8.3% after reporting and trades at $81.75 per share. So should you invest in Shopify right now? When making this decision, it's important to consider its evaluation, business quality, as well as what has happened in the latest quarter. So I get it. So there's no problem with Shopify business model. It's just that Wall Street had so high expectation that the quarter results didn't live up to their expectation, so it went down by 11%. So if they had expected low um, expectation, then it would have not gone down by this much. Um, and now it's going back up. It's up by 2% so far. Around currently right now, I'm looking at it as percentage change. Um, so I would say that still, if you buy it long term, then it's gonna go upward at the end. It's just that I have to be like mentally strong in order for me to withstand these kind of ups and downs. Anyway, this is it for today. I just wanted to briefly read Shopify because Shopify is like one of uh the companies that um one of the companies that um a large portion of my money is in Shopify. So that's why. Anyway, this is it for today, and I'm gonna see you tomorrow. Okay, bye bye.